Live, here we go. All right, good afternoon, fellow roomies, and today we want to discuss the market maker's business model. Now, this is one of the most important lessons that we're ever going to learn, so definitely want you guys to get it. Thankfully, this will be recorded for all that might miss it. First thing we want to talk about, the very first thing that we have to understand is who runs this ship, okay? There's a giant ship floating on the ocean. Somebody runs it, okay? Somebody's in control of it. The banking houses of the world are the giants. They are the rulers of all. We are talking about the Rothschilds, the Bilderbergers, the Kuhn Loebs, etc. All of the banking houses of the world. There is so much info on this on the web and proof that you could literally spend 100 hours verifying this. You could probably find this at 500 to 1,000 different websites. Some of them might have a little kooky slant, all geared towards Illuminati, Illuminati and end of the world type stuff, that we're all doomed and doom and gloom. But there's a lot of really valuable websites out there that will show you this information. They are the masters. It's absolutely the truth. Now, the market makers are the henchmen. They are the guys that do the work. They basically have unlimited sums of capital at their disposal, and they also work in tandem with central banks, and that would be the currency wars of the governments of the world. All right, and if you don't know about that, you could read a book. There's a book out there written called Currency Wars, and it is the truth. Why would you have to go out there and spend fortunes on tanks and bodies and soldiers and $20 million airplanes and stuff like that? It would really stink to lose a $20 million airplane. It's much easier to just shoot bullets right now these days with currency, and they do. There's sanctions and all kinds of different talk and different ways that they put it together, but they are basically engaged in a currency war, all right? And everybody has to fight this war. There really isn't much of a choice. If you don't fight it, if you just throw your hands up in the air and say, I'm not going to fight it, then you have inflation or whatever is discharged to your country, and you're basically left to suffer all the consequences of not fighting the war. Okay, so let's talk about the market maker's business model. Their business has a cost. This business is not free. It definitely has a daily cost to run. That cost is about $20 million per day. This is needed just to pay the salaries and the lights and the power and the computers and the servers and all the different people that have to take care of the systems, all the people that pertain to this. It's a lot of people, folks. We're talking approximately 7,000 people that are connected to the system. This system works on all of the currencies of the world, by the way. It is not just the majors crossed against themselves that you and me happen to trade, but there's much more. All right? Weird things, really strange exotics. If you put every single currency together, I'm talking Thai baht, I'm talking everything, $4 trillion a day is traded, and that's actually on the rise. It might be 4.2 trillion right now. I don't have the actual number, but it's a lot more than 3. Okay, it's a lot more than 3 trillion a day. I know we're right around 4, maybe a little bit higher, trillion with a T. Now they also trade the not just the currencies of the world, but the metal markets, not just gold and silver, but we're talking palladium, platinum, you name it, oil and gas, futures, options, commodities, wheat, like lumber, things like wheat, lumber, and orange juice, coffee, sugar, you name it, pork bellies, okay, cattle futures. It's all connected. This is on another level, all right? And then another level, a third level, would be derivatives, bonds, treasury notes, and stocks. It's a whole nother section of the grand game. Comes with its own additional costs, its own additional manpower. For instance, you have the New York Stock Exchange specialist that works the books of each publicly traded company. They have amazing powers. Now, I don't know exactly how many are in the Dow. I probably should know that number. But when you put the Dow and the NASDAQ and all the other markets together, including the over-the-counter bulletin boards, pink sheets, whatever, you have a massive list of stocks, slightly more than 9,000, I believe, 9,200 stocks. All right. So that's another massive section. But for us, we're just talking currencies. Okay. Now, in order for the market makers to make money, they must have a repeatable system. They have a crazy money supply. We already know that. It goes into the billions and billions and hundreds of billions of dollars. They have a system that they work, and they use specific sequences of events. Now, some of these events are news releases, like the one that we heard today, which made the market move, by the way. And we'll go over that today in just a few minutes. All right. Now, they already know the answer to the official numbers before they will ever be released. You cannot possibly tell me that they don't know the number. They absolutely do know the number, okay, because it really mixes in with their business model. And they have people on the payroll that help them and give them that number. All right, they know exactly what it's going to be. They have information that you and me do not have. This is just one aspect. Okay, the other aspects are the talking heads. Now, when I say the talking heads, I'm referring to the governments of the world, like the bankers, the Fed speakers. For instance, today you had a particular Fed speaker. If you remember what happened on Friday, you had one Fed speaker. He said one thing a certain way, and boy, did it move the market. And today we had another one come out and basically talk very dovishly instead of hawkishly, and it moved everything in a whole different manner, okay? So they ignite moves by these Fed speakers. And there's also many other various levels of folks that are connected to this game, and they are instructed to say the right things or the wrong things, but they're instructed to do this at precisely the right times. They are on the payroll, and they play a very large part of this job. Now, what is the job? The job is none other than to extract money from this market every single day all over the world. Okay? Everybody's involved, and they're all trying to make money. The central bankers, they do want to make money sometimes, but that's not always exactly their goal. They're so linked with their governments. A lot of it is just to provide some liquidity and things like that, and it's not always about making money. Sometimes it's involving something different, that they are trying to move a particular currency in a certain way that will crush another economy, like, for instance, Russia. If you think those sanctions against Russia and all that stuff with, Crimea a long time ago, did you see what happened to that Russian ruble? It went ballistic, okay? Nobody could have ever seen it going that high. And I'll tell you, that played a huge, powerful impact on the Russians, okay? So the market maker's key job is to make the market and to set prices. Now, they have to make the market at all times. So they are willing to work huge amounts of orders, and they devise plans and strategies to soak the market. One of their goals is to trap traders with losses at certain key particular times, and then to squeeze them and to hurt them, so that eventually these losses are created and that they will expand and become even greater. They want the losses to become unbearable so that people will have to stop out. And when the market makers have taken the other side of that, there's a big profit for them. So the market makers then will look to take back what they bought or what they sold, but at a very profitable price. Now, the market makers are involved in marking prices both up and down, and there is great reason for this. Nobody would trade if prices stayed the same all the time. So the market makers have to create beliefs about what a currency is going to do. They will paint a picture on the chart. The chart is the facade. It's what you're looking at. It's what they want you to see. And they want you to be very indicator orientated and very candlestick orientated and not looking at the big picture. They don't want you to step back looking at the 15-minute, 1 hour, 4 hour and doing some heavy duty thinking. They would rather you be focused on a smaller picture so that they can try and take your money. All right. So they'll paint this picture on the charts in order to get traders to place trades and risk their capital. Now, this is all done rather craftily too, I might add. Confusion and whipsaws are very desirable for them. It helps them a lot. And you can notice this at key particular times. One of the best times I can think of is non-farms payroll, which is actually rather predictable. I mean, it should be if you've ever watched NFP a bunch of times, and I've traded NFP for years and years and years. And what you'll notice is a lot of gambling, Okay, a lot of position squaring before the numbers are released, right? And then right after the news hits, especially if it's a shocker, there will be an intense whipsaw in one direction to knock out stop losses. And it usually happens across the board. You'll see it on every currency. Within about 5 to 15 minutes, it will reverse and go up or down the other direction and knock out stops on the other side. And then they will often pull right back and consolidate through the rest of the day right in the middle. So it makes a wild whipsaw effect, gives them a lot of money really fast, and then they can work orders for the rest of the day. Another great thing too is if you'll notice oil, what happens with oil. The news is the most bullish at the top, and it's the most bearish at the bottom, and that happens all the time. And they'll try and get you on a contract close. Okay. So the sequence of events that we're talking about here is the accumulation of a currency. You must combine this with manipulation. Now when they're accumulating, they're either buying it to sell it later, or they're selling it to buy it back later. And there is what's called a profit release phase. This profit release phase takes place after a trend has been ignited in one direction and the squeeze is on. And I'll show you this on the charts. I just want you to remember this right here. I'm going to show it to you on the charts. This is the most important part right here. They accumulate, they manipulate, they buy or sell, then they mark up or mark down prices, and then they're going to release it. And you will clearly see this before this day is done. If you guys have any questions, please hold them for now, but afterwards we can ask, okay? So the process to get them into profits. So let's talk about the buy side first. We'll just use the euro dollar as an example. All right? If the market makers know that in the next day or so that there will be some kind of economic numbers coming out, or perhaps some kind of a news release is about to come out, or maybe a certain talking head, like Draghi, for instance. Draghi might say just the right thing and move the euro. They will, and they know, let's say that they know this is coming out and it will technically or fundamentally move the euro dollar up for the day. They will often hold the euro at a certain level for many, many, many hours. But they'll try and create the illusion that it's going down. Remember, they set the prices. So in a low liquidity time, they can mark the prices down in an attempt to paint a picture of a breakdown or of a coming breakdown. Sometimes this will even attack stop losses that they see in the market, and they do a cost basis analysis. Okay? And it may often cost them $20 million to run a market to a certain price so that they can soak up $60 million worth of stop losses. And then they take the other side by buying it all up into the stops. They will buy it all. If it costs you $20 million to make 60, believe me, you're going to spend that money. If you are the one who has access to the order flow and you see it and you point it out to all your other evil henchmen and you say, hey guys, look at this. We could spend 20 million right now and we could get this and turn it around and we'll make 60 by the end of the day. You're going to do that. Okay, that's exactly what they're doing. All right. I'm going to get to the next chart. So very often you can see this happen on charts and then the market simply reverses. The news can even be the culprit, right? Sometimes you can hear a news release. It looks like I have a typo. That's fun. Here we go. A news release that should make the euro dollar go down, right? And it does, but only for 15 or 30 minutes. And then there's a sharp reversal and an upward move. And that will leave a lot of traders scratching their heads. And they're going to be wondering, why is this happening? The news was so bad. It was bad enough. If it was bad enough, there would even be traders that are willing to short the upward move, thinking, oh, this is just temporary. It's going to pull right back or whatever. And the market makers can use this as fuel for the fire. They will buy up all the sells and just keep on marking the prices higher and higher to squeeze the market in one direction. And it can be very painful to those that are on the wrong side. So just remember that the market maker's job is to accumulate orders, and then they move the market to release their profits. So everything is perfectly matched, and in order for them to make money, they have to convince folks to sell to them. All right, it's very simple. They want to buy, they have to convince you to sell. So there's a little manipulation in there to try and convince you to sell. It works the same in reverse. If the market makers know that a currency is going to go down from a news release or a statement that's made by a talking head, they will often hold prices for a very long period of time to accumulate as much as possible sold to the folks that are convinced that prices are going to go up. And they will often do head fakes, which is like a false breakout, or flags, or ascending wedges, or triangles, or pennants, or however you want to call it, okay? Even the head and shoulders pattern on an hourly or 15-minute chart after a wild move of 5 or 6 days and hundreds of pips, you can get a head and shoulders pattern. What they're doing in there is they are selling all they can sell. They are taking the other side of every single ounce of upward movement so that they can accumulate all they can for what is coming later. And they know what they're going to make happen later. It's always very well thought out. It's very well planned. If you've ever read the book Sun Tzu, The Art of War, you know, feign weakness before you attack, all right? It's just simple. It's a battle strategy. They devise a plan, they devise a strategy, and they execute it. It's really that easy. It's not rocket science. It's not complicated. So this entire business of trading is really not about you and me, okay? It's not about us. It is all about the market makers running their multi-million-dollar business. It is all about inventory collection for a certain profit release phase that will be coming. They scale in and they scale out, and it is actually just that simple. It is so not complicated. They accumulate, they manipulate, they work orders, they mark prices up, they mark prices down. There's also something in there called fractional disparity, but we'll have to talk about that at another time because it takes a little more time to teach you that. But there's not much more to this, okay? This is the core. This is the nutshell of their business. It is highly sustainable, and it is highly repeatable. In fact, you can run back the charts from last week, last month, last year, and just keep going, and you will always see this in effect. It never changes. Now, as Led Zeppelin said in the Stairway to Heaven song, yes, there are two paths you can go by, but in the long run, there's still time to change the road you're on. Okay, which way do you want to go? Do you want to believe this is your business, that you're a trader, you're a Forex trader, and this is your business of trading, and end up like the other 90% of traders that just fight and lose? Or would you like to believe that it's the market maker's business and hitch a ride to success? You see, most of the time, and now you got to get this, folks, this is so important, I can't even tell you, most of the time traders are selling when they really should be buying. They're doing the wrong thing, okay? And they're going to smart for it later. They're going to sting. It's going to hurt later. And a few days later, this is very, very evident on the charts. You can't hide it. The charts are the footprints of money. It doesn't lie, and you can't hide it. It's impossible to hide this. You're going to see it in a few minutes. We're going to go over a bunch of charts, and you will see by the end of this, all right? Now, other times, traders are buying when in reality, they should be selling. And a few days later, they sure wish they didn't buy. They're crying. And you don't want to be that guy that is crying in their soup or crying in their bottle of beer at the end of the day. So the market maker business model, right? Again, they accumulate to sell at higher prices, or they accumulate to buy at lower prices. They literally are taking the other side of other people's trades. Just like I think about half the Forex brokers do. They take the other side of your trade. But half of them are true, pass-through brokers, and they won't take the other side. At least that's what they tell you. I don't know about that. So, what is our business model? Okay, first we must know that the market maker business model is, we have to know what it is, and then we simply attach ourselves to their model. We have to have an ability to interact with that model that they have built. We, you and me, need to pinpoint the turning points where it looks like all the buying is running out of steam and it is most likely to reverse. We need to pinpoint areas where the selling pressure appears to be totally running out of steam. Complete capitulation in the markets. Everybody's throwing up. Everybody's throwing in the towel. They're all hugging the porcelain bowl. They can't stand it anymore. Okay, we need to see that capitulation, pinpoint these areas where it's just completely running out, and we need to get to the point where we are participating in the coming reversal. Patience to hold on is great, and skill to accumulate on the pullbacks is very essential. I'm going to show you what this looks like in just a minute. So we want to go to the charts. We want to see what this looks like, and we're going to be able to see all the setups and all the moves. All right. But before we do, I kind of want to put this in there too. I know I got these slides a little bit out of order, but the rules of the accumulation in the market maker game is that they need to be as sneaky and covert as they possibly can. They don't want to tip their hand. They want to make sure there's no discernible direction, just very sideways, very slow, no beliefs about going up or down. Confusion, again, is a very desirable goal for them to instill, especially at news time. Now, let me go ahead and get rid of this. And I want to bring up, I don't have it yet. I guess I can get this fairly quickly. Give me one moment. P-A-I-N-T. Paint. So, get the paint bar up. Now, a little pencil, go a nice thin line. Okay, I already have it. That's good. So, let's say that you're looking at a 5-day fall on something. I don't even care what it is. It makes no difference. It doesn't matter. The 5-day fall could be Euro Canada. The 5-day fall could be Euro dollar. It could be pound. It just doesn't matter. Okay, you're looking at some incredible fall, straight down for a bunch of days. 5 days, 6 days, whatever it may be. Now, for a multitude of hours that you'll see in a 15-minute chart or a 5-minute chart, you're going to see something that looks like this. Prices are basically going to be bouncing up and down in a very consolidative manner. All right, they're just not really going anywhere. This is very similar to what happens in the Asia spread, which can sometimes be about 25 to maybe 35 pips maximum on the euro, all right, or on some other pair it could be a little bit wider, but let's say that's about a 25 to 35 pip range, and let's say this is going on for hours. Now, very often what they'll do at the end of this is that they will attempt very hard to pull some kind of a sneaky little tactic. Perhaps they will go up and grab a bunch of pending breakout traders, right? And sometimes afterwards they'll go straight down and stop them all out through the range, right? You hit all the pendings right there, and they're like, oh yeah, I'm a breakout trader. And it just rips them apart. You know they put their stop right underneath. Okay, that's where they put their stop, and it'll rip them too. And then they'll turn around and rock something in another direction. This could take hours to happen. Then there's a pullback. Hours more going up. Pullback. Hours more going up. This can take days. You've seen it in US Canada just a couple of days ago. As a matter of fact, we talked about this completely. So if you have a 5-day down move like that, and then you have a beautiful 3-day up move like that starts to hit into another top, right? Very often they have accumulated a ton. They accumulate pullbacks because they know what they're going to do. So they accumulate all this. And then sometimes they'll bring it up to a 786 fib like that, or an 886 fib like that, and then they'll put it back into consolidation again and rock it down. But sometimes they will not do that. They cannot repeat it exactly the same every single time because it would just simply be much too clear for you and me. It would just be too clear. Everybody would know. So a lot of times what they'll do is they'll push it up higher and make it look like it's going to rip the world open right there before they do some kind of choppy thing and then bring it down. All right. Now, I'm not the best drawer in the world, so forgive me for the drawing. It doesn't look that great, but let's go see it on live charts. Now, the first chart that will be so simple to see this on is the US dollar Canada. And because this is very, very fresh in your mind, too. And I know it is. Here is a 240-minute chart of US Canada. And you see this area right here? This is what I'm talking about right here. See how many hours? You got 1, 2, 3, 4, 5 bars, and then a little bit more. So maybe a total of 24 hours right in here. Let's go see it on the lower time frame. I'll have to go way back for this. Scrunch it up a little bit so we can get back. And there we are. Okay. So this is a 5-minute chart, and it's stretched out for a good length of time. You can see that this is approximately a day and a half. And a lot of people look at this and they say, oh, this is just consolidation. Well, it is consolidation in a sense, all right? But what it really is the market maker accumulation stage. These two lines that I have in place are exactly what happened on the 4-hour charts. Think about it for a moment as I push this right up underneath that candle. And think about it for a moment as I bring this down to that candle. Look what happened. They went sideways for a good length of time. This is so many hours it isn't even funny. Okay? How many hours are we talking? I think about 7 or 8 right here. 7 or 8 hours. They push it. Trapping, breakout, pendings. Then they turn around and rip through a trend line and start to attack those lows again. Pushing it again. Stopping it, stopping people out. Now look, you know somebody got stopped out right there. You know it. Just like somebody got stopped out right here. You know it. It went underneath that 4-hour candle low right there. I mean, that was a 4-hour candle low. And you see the prices went underneath. But you can see that they tried to get breakout traders first. Here. Then they washed them. They got breakout traders there. And they washed them below the 4-hour candle lows, crushing people to death. Now think about how long this took. Let's say that this did take approximately 24 hours for the sake of our discussion, all right? And they're buying every bit of it. They're buying it all. They're going to have a median price somewhere right about here. Just for the sake of argument, let's say it's directly in the middle. That's their median price of all of their longs. Once they get above a particular price, every single thing that they bought is in profit. Every bit of it is in profit. If you don't know how this works, a great book to read would be Jesse Livermore's book, Reminiscences of a Stock Operator. It's a great thing. They operate this Forex market exactly the way somebody would operate a stock. When they drive it up here like this, do you know what's happening? They are releasing a ton of profits. But I'm telling you that all the way back down, they are in the accumulation mode again. Remember, the market maker's job is to make the market. They must work orders. Now, it doesn't necessarily mean they're going to keep every single solitary bit that they bought. No, because they got to make money. They bought really low, and the goal is to sell high. They might buy a little bit back. Small portions of it might be bought back, but their goal is to sell high. Their goal is to sell, sell, and when you get a move like that, I guarantee you they are buying it back, and a little while later, they're selling it, selling it, selling it, they're buying it back, buying it back, buying it back, selling it, buying it back. All this move they're accumulating for what's about to happen. And here we go again. Wow, look at how it repeats. It's very simple. Whenever it gets really pricey, they have collected a lot of inventory. They are going to sell their inventory off. They are going to sell that inventory away. And when you get big crashes to the 200 moving average on a 5-minute chart, don't you know they're buying it back? You and me would be. You and me would be buying it back right there. Okay? And look at the move. Look at that move that just happened over all those days. Okay, let me drop into a 60-minute chart. Try and clean up the charts a little bit. See that? Is it a little more easy to see right now? 24 hours of unbelievable accumulation. Whipsaws, stop runs, put the pressure on them, squeeze the living crap out of everybody who's long, knock them out. Buy it all back. Release. Buy it back. Release. Buy it back. Start releasing. Start releasing. Let's release more. Release more. Release everything. Accumulate again as fast as we can for the other side to take place. Right here. Okay? This may have only been, 5 or 6 hours, but I can tell you they were just about empty. Every last scrap that they ever bought for 3-4 days, whatever it is, 4 days I believe it is, they're gone. They're empty right here. And they're taking the other side. And you now have push one. So what would you think would be happening right now with stochastics buried in this manner? Everything that they sold up here, they are currently buying it back at a profit, I might add. Absolutely guaranteed they're purchasing it back at a profit. Now, what do you think is going to happen if they sold up here and they're bailing out over here, and if this should pop firmly up towards there, or maybe even up towards here? They're going to go right back into sell mode and start selling and selling and selling for another move that they anticipate to come lower. Okay? The 1-hour charts and the 4-hour charts rule the market. The very greatest traders, the very best, are going to be focused heavily on 4-hour and 1-hour charts, and they're going to make their decisions on the 5 and the 15 based upon the 1-hour and the 4-hour charts. Now that's just one example, and I got a million more. Take a look at the euro. Take a look at what we saw just the other day. I'll go into the 60-minute chart first. Do you remember days ago we were talking about how the euro was a buy? Right in here we said it was a buy. And we also said there was a bull harmonic with a target of 112.40. You don't think the market makers noticed that? I mean, really? Are you serious that they did not notice the bull? They worked the bull. And they did just what we did, okay? When this thing ripped higher, they are releasing profits right in here. But when it comes back to support like that, they're buying again. They are absolutely buying it, that arrow right there. They're releasing it there. And they're taking the other side of the trade to push it back down. Now, we've been talking about euro being along for quite some time. What do you think happened in this entire channel? They were accumulating right in here because they knew they were going to have news come out and it was going to do this. And this puts them in their profit release. They will release at the tops as much as they can dump. They will consistently buy back the bottoms because you only have push number 1. That's it. That's all you got. After push 1, you usually get a push 2. Oops. There it is. Wow, this stuff actually works. Look at that, huh? Okay, so I'll clear the charts up one more time. And remember, the other day, right here, I was saying the euro's a short, and that this was target 1, and that was target 2. If you don't remember, go right back into the Skype chat. You'll see it. It's in there. I mean, we hit target 1, we hit target 2. We even talked about a dead cat bounce, and there's the bounce. So they are selling it back again, selling the market, selling much more for this coming push. You get it? Now, sometimes it can go rather quickly, and sometimes it can take a nice long time to happen. Take a look at the Great British Pound, and we'll look at the 4-hour chart. What do you think happens in the lows? Not just market makers, but all smart traders are buying in the lows. And they're waiting for the market to come back to some amount of sanity. Okay? That area looks pretty tough. And there it hit. This area, it looks pretty tough. And there it hit. So market makers are buying the bottom and they're releasing it on pops. They're buying those bottoms and releasing it on pops. It really shouldn't be hard to see. And none of you should be thinking, oh, this is too simple. You're being ridiculous. Am I? Am I really being ridiculous? Think about it, guys. The charts do not lie. Here is the 60-minute chart. What is that little pattern right there? Well, it's kind of like a wedge, a little bit like a wedge, and it's a little bit like an ascending. Yeah, it's like an ascending wedge or an ascending triangle. Whatever you want to call it. I don't care about the name. The name is not that important. But look what happens. It's setting up a view that we're gonna go higher. But something happened. Whoa! What was that right there? That was a news event that drove this thing down. And you cannot look at this chart and tell me that somebody did not take the other side of that trade. You can't do that. It's absolutely impossible to look at this chart and tell me that the market makers did not buy the other side of this 2-hour movement. They bought every living bit they could get their hands on. Why? Because they knew they were going to do this. And there's your release, and there's your buyback. There's your release. There's your buyback. There's your release. And you're just about empty. Okay? That is exactly the way it works. The charts do not lie. This is not rocket science. This is very simple. It is a repeatable process that goes on again and again. I challenge you, go back and look at every chart you feel like for hours and hours and hours on end, and you will see it. There's no way you can miss it. It is absolutely impossible. Think about it. Here is a daily chart. It is a daily chart of Pound Canada. 1, 2, 3 days down. Nice pop, nice pullback. But they relentlessly sold the living tar out of it. 1, 2, 3, 4, 5, 6 more days. Now, if you're going to take those 6 and you're going to add these in, okay, what do you get? You get 9 days down. Are you telling me with stochastics buried like that and 9 days down and breaking a prior critical low? Okay, critical low. I'm shaking this arrow. Are you telling me that somebody did not get long right there?
You did.
What happened? I just got muted. I don't quite know what happened. But I'll keep an eye on that because we don't want to miss this, okay? So I got muted for a second. I don't know what happened, but look, the daily chart, so crystal clear. You broke that low right there. You terrorized every single pound Canada trader on the face of God's earth. They were throwing up. They cannot bear this kind of a move. They simply can't bear it. Anybody who trades with full standards or more is going to be crushed. So, look at the 240. What does it show us? See? Right here, this is the 240-minute chart, which I said rules the market. What do you think happened right in that bottom? Okay, look, see over here, the low that we broke? What do you think happened right in there? Let's see now. 1, 2, 3, 4, 5, 6. 6 candles. 6 times 4 is 24. 25, 26 hours maybe? 26 hours of consolidation right there. Okay? Let's go ahead and take a look at it on a 15-minute and see what it looks like. I'm going to scrunch the chart up real quick, just for a minute so we can get to it. Pull back. There it is. We're getting closer. We're almost ready. Just trying to get it blown up nice and big. Now we see it. 24 hours you're looking at right here on a 15-minute chart. They are collecting every bit of it. Certainly, they will capture some breakout traders and stop them out. Over here, release, sell to the breakout fools. Stop them out. Don't you know they stopped? Look, think with me. If you purchased right here on that candle, where are you going to put your stop? Would it be like right under that candle? Like right there? Uh-oh. You bought the high. You bought the high. Yes, you did. 166.80, 166.90, 167. Holy smokes. 167.30. Splat. You're dead. 120 pip loss. Most people can't contain 120 pip loss down here. You see it? Pulled up again. Stopped them all out one more time. Multiple stop losses can occur. Multiple layers. Don't you know they ate every single bit of this move? How do we know that they ate this move? It's pretty simple. They had a median price somewhere in here. And when we go to our charts, we clearly see the profit release phase. It's being released. Every upward move is being released. Every downward move is being bought up. See it? It's clear. It's as clear as a whistle. The charts don't lie. Now, I'm going to go to the 240. Oops, 240. What do we see right now? Right this minute? I see that we are very overbought. I see the stochastics are pointing down. I see a brutal bunch of pin bars right there. And this should be a stop loss, and that should be a stop loss for those that are not very risk tolerant, or the most risk tolerant among us. This should be a stop loss. But I'm just saying, this really does look lower, doesn't it? So if we have this right, and we don't know because sometimes we're hit and sometimes we're stopped out too. I mean, it does occur, I do occasionally lose money about, 10, 20, or maybe even as much as 30% of the time I may take a hit. But this to me looks very overdone, and like there's a beautiful down move coming, and the market makers will not only release everything that they bought down here, but they're now getting short. And they're going to go ahead and buy it back when it falls. And there will come a future time that they will empty themselves of every last short, and they will accumulate longs again for another purpose of going higher. Okay? So, we've looked at, I think, 4 charts so far. Canada, Euro, Pound, and Pound Canada. Is there any other charts that this might actually work on? Guys, it works on every single chart that there is. Every single chart. Without a doubt. What do you think happened over here? It's diving. It's diving, diving, diving. I can tell you right now what happened in this daily chart. They were letting go of every single thing that they sold higher. All up in here, they're letting go. And there has to be accumulation that takes place. I see 1, 2, 3, 4, 5 days. That's a very long accumulation. Very abnormal. You normally don't see 5 days of accumulation. It's rare, okay? But if they're willing to go ahead and grab 5 days worth of stuff, 6 or 7 days worth of stuff, it has a powerful move that usually comes afterwards. See it? That's the move. Now, look back here. Here's our daily. We'll get a little more recent. 1 day down. Day 2, day 3, 4, 5, 6. Day 7. Day 8. Day 8.5 when you get to that green. Okay? Pound Australia. Do you know anything that moves down like, 7, 8, 9, 10, 12 days in a row? Whatever. The number is not important because it always changes. When something is moving 7 days down, you're thinking long. When something moves down 8 days, you're thinking long. Okay? 9 days, you're still thinking long. You don't change your mind. Well, it was 7 days down, we were thinking long. Now it's 8 days down, we're still thinking long. It's day 9, I think we better think short. Oh, really? Look, 9 days down, something happened here. All right? So simply go back to the 4 hour and look. Here it is. This is like day 7 through 9, right here, that I have covered. Okay? Day 7 through 9, approximately. I don't know if I'm exactly right. I'm just, for the sake of argument, they're accumulating like mad right in here. And look what comes later. It's the release stage. Big candle, breaks the high. They might have been buying for days and had a median price right in here. What happens when they get the pop? They are releasing profits all the way up, every bit of it, to people that want to buy it. Because they are in so much money. They spent 5 days purchasing. 2 days. 2 days purchasing. They know they're going to push it, so they do. And when they get a chance to release it, they will. And when you get pullbacks to areas of support that is so clearly seen, look at the candles. Look at the bodies. I'm going to blow it up really big. It's right there on candle, that candle. It's that candle. Okay? It's that candle. And it's this one. You get back into an area like this. This run is not over, guys. Okay? They've been buying for, a couple of days for a certain purpose. And that purpose is to move prices higher. They might release, 10, 20% of what they got. But when it falls, they're putting it right back on. And when it goes up again, well, maybe they'll go ahead and release another 10% up in here, and maybe they'll release, 10% up there. And when it falls, they're putting it back on. And if it goes up here, they might release another 10%, so now they've only got 70% left. Boom, they're putting it back on. Release, buy. Okay, it's that simple. Release, release, release like mad. Get rid of everything. Buy the living tar out of it. For what purpose? That move. You see it? Pound odd. Now, what do you think they're doing right now? I'm telling you right now, they're releasing. They are getting rid of every single thing they bought low. This is a release phase. Okay? They're not even ready to start accumulating yet. So, wait. Back down here, there might be some small accumulation, but maybe not a ton. Back down here, there might be some small accumulation, but maybe not a ton. Okay? So, for 1 second, let's go back to the paint chart. Let me get rid of this for a moment. We'll just go ahead and open up a new one. Oh, wow, time flies. My gosh, it's 5 minutes of 5. Okay, well, here's what I'll do. So you look at it like a giant circle. Okay, here's your circle. All right. And when prices are moving down like this, they basically are releasing everything that they sold for, let's say, 1 day, maybe even 2 days. Okay, 2 days. Just envision this as 2 days of consolidation, and that they're doing nothing but selling, accumulating sells, because they know they're going to drive prices down. So as it's falling, they're releasing. Okay, they're getting empty. Now, the market moves in this circular fashion, but eventually you hit an area where it just can't go anymore. And so they start to buy, and they buy, and they buy, and they buy. And their purpose is to release on an upward swing. This is the grand circle of the market. Okay? Just like this. And what a lot of traders do is they're buying up here in the highs when they should be selling, or they're buying up here in the highs when they should really be selling. Okay? And a lot of times they're even buying these downward moves when the reality is it's not done yet. And you ought to be waiting for pops to sell, okay? And this is the, it's not the conundrum, it's just the circle of the way things work, and we as sharp and savvy traders should be looking for that area there to accumulate longs, and this area here to accumulate shorts. All right? One more time. It looks just like this. Sideways action. Incredible manipulation on 15-minute or 1-hour charts for great lengths of time. Sometimes there's pushes down, pops up, come back. Pop up, come back to support. Pops up. Okay. This could be hourly charts if you wanted it to be. We can talk about it that way, or we can talk about it as 15-minute charts. It doesn't matter. You're looking for great runs to exhaust themselves and have pullbacks to an area that should be support, like right there. Great runs, people release, the market makers release, pullbacks to a 382 fib or a 50% fib, right? You want to get long. You want to trade this trend as much as you can. Now, if that was a left shoulder, and that was a head, okay, and if that was a right shoulder, and if this right here was your, oh, I didn't draw that very well. I'm sorry. I don't know how to draw very good. Okay, there. If that was your line, right, your neckline, what do you think they're doing on all this? They just made 3, 4, 5 monstrous pushes over the course of like 5 days or something, right? They are selling every bit of this because they are the ones that make the head and shoulders pattern appear. And down you go. Okay? This is where you want to get short up in here. And that's where you want to get out. And actually get very lightly long because of this. Then when it bounces back up again, hits a fib level of the recent highs, you want to be short for that move. You get it? The charts don't lie. It's right there. It is so crystal clear, it isn't even funny.
So
We'll look at one more.
August import price index.
Oh, I still got my news guy on.
The August import price index has minus 1.9
Sorry.
cents.
Let me mute him for now. Let's look at another one, okay? We'll go to pound Swiss franc. Because these examples, they just simply don't run out. See the pound Swissy? Actually, let me put it on the daily first. Here's a multi-day down move. It broke a previous low. That was very critical, and that was very important. 1 day down, a little bit of a dead cat bounce, just for 2 days. That was consolidation. Right here, where the arrow is, nothing but consolidation, accumulation to sell for that goal. They're releasing 1, 2, 3, 4, 5 days down. What do you think they're doing on day 5 and day 6? They are getting out. I am telling you, they're getting out of every single thing that they sold in these 2 days right here. Very clear. Sell the living tar out of it. And now they're bailing. They have patience. They have patience that you and I need to learn to develop. Okay? Here, you break the low. What do you think is happening when this is breaking the low? Every trader on earth that was long pound Swissy is getting their head handed to them on a silver platter as it goes through that low. They are puking their guts out. What do we think the market makers are doing in here? Accumulation, baby. Totally accumulating for that long. Right there. How many days? See, we never know exactly how many days somebody's going to push something higher. If we knew this, we'd simply get long, go on vacation for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. We'd come back 9 days later at the end of our vacation and bail every bit of it right there. We don't know that, okay? But we can look at the charts and see stochastics are buried. They're crossing over. You've been down 5 days in a row. I'm not about to short this. There's no way. All right? So let me get rid and clean some of this up here. And I'm going to try and put an arrow just so I can find it. And we'll drop into a lower time frame. I want to be able to find it. It's there. And it's there. 240. Enter. Okay. There it is. There's the whole area in question. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 20, 20. Okay, this is more than 30 bars. 30 times 4. Holy smokes. Guys, that's huge. Okay, that is really, really big. That is multiple days. That is a massive amount of time. Look at the accumulation that they did in this time frame. And when they finally move it over these highs, everything goes into profit. Everything. Release, 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 get rid of it. Release more, get rid of it. Get as empty as you can. Buy it all back. Get as empty as you can get up here. Not all of it, not every bit. Buy a whole bunch back. Now you really start to get empty. Very badly. They are emptying themselves of almost every single last scrap that they purchased, because this is a monstrous move of about 7 or 8 or 9 days or something. Small buybacks, tiny, not too big. Get out. Buy a little bit back maybe, get out. Totally empty. This whole thing in here should have been accumulation for shorts. Down they go. You see my point? Does anybody have any questions? I just went over time. I actually went 5 minutes over time. I'm sorry. Any chart that you look at, you'll see this very same thing. I don't care what it is. What was another one we traded in the last couple days? New Zealand. All right, New Zealand. Here it is. Daily. All right, well, we know they're pressuring the market incredibly bad. Right? They're pressuring it and pressuring it. What happened up here at the 1.618 fib? What happened at the 144 fib extension? And what happened at the 127 fib extension? Okay, all those fib extensions right there, I can pretty much guarantee you they were accumulating for the other side. Take a look at that low and that high. This is 2 full days. Let me go ahead and get rid of the arrows. 240. See it? This is so fresh in our minds because we talked about it. We didn't just talk about it, we shorted it. We were shorting, we were shorting, we were negative and shorting, we were shorting more, we were getting incredibly short. There's the big whomping 4-hour sell. Boom. Down it goes. It attacked our target, right? Attacked our target, even went lower. It happens. What are you going to do? The market makers are selling every bit of this, every bit, for one purpose. Drive it down and get out. Now you know they are making money on this entire move. It's all money to them. But when it hits this great low, are they getting empty? They are definitely getting empty. And they might even be getting long. Look at that. This is something that happens all the time. Stochastics base out like this all the time. Crossover, go right back up. Look at the price. It's done the same thing. So if the market makers bought any of this in, well, let's see, you've got 1, 2, 3, 4, 5, 6, 7 bars. I mean, it could have been 6 bars or 7 bars, whatever they started buying somewhere down here. They are now releasing. They're getting out. Okay? And if this pops any more and they have anything left at all, they're going to get out. They're going to bail, probably here and here. That's their exit strategy. Okay? How do I know this? I have been staring at charts forever. Forever. 16 years is forever, man. I'm telling you. They are going to get completely empty in this zone. They will take the other side and they will get short. They will accumulate shorts to drive it down. Guys, I am speaking the absolute truth. I remember years and years and years ago, I remember hearing about one trader that did it. It was a former bank trader, and he did this on his own too. And he did it on the Euro Swiss, and it did something crazy one night. And every 1 minute bar that moved up and up and up, he was slapping it, slapping it, and slapping it. Something happened, and it rocked down like big, like 150 pips. I forget what the guy made. I mean, it was something so big. I think he made something like, I don't know, folks. I can't remember. I mean, it was incredible. It was like $20 million. Okay, he spent all night long doing it, and he made like 20 million bucks. when the day was over, he went on vacation. Okay, it's amazing. All right, pardon me. So I have to clear my throat. Okay. Any questions on this model? On what we discussed? Any questions at all? Any questions about the way it works here? The consolidation. I only showed you like a little buy side here, but we could easily do the very same thing and show the sell side. Okay. So the market has gone up for 7 days in a row, 6 days in a row, 5 days in a row. It doesn't matter. Okay, it doesn't matter. There's some pullbacks, right? Now you drop into 15-minute charts and you run it out for a whole bunch of hours. You know, maybe 8 hours, 9 hours, who knows? Maybe even a weekend. Maybe even a weekend. Okay? Scare people half to death with that type of move. Accumulate your final sells. Bust hell open. See it? Empty yourself of a massive pile of the trade. Not all of it, but, you know, maybe 30, 40%, right? It rocks back up again. You accumulate the living tar out of it to the short side. Drive prices down. You're scaling out, you know, 10% here and 20% there. Now you're scaling out 30%, 40%, 50%. You're really getting empty, okay? You're not emptying yourself 100%. No, the market makers don't do that until the move is really over. Remember, they have the power to hedge too. They hedge. They can buy while keeping all those sells. Not all of them, but on a move like this, like let's say a big 2-push move on the hourly, they might be 70% empty. They can hedge small, dump them here, dump it, hold their last 30% short, rock it down. Bail, get empty, 100% empty, start the accumulation process again, do something else. Andy, how do the prices get to the release or the buy stages? Is it news? Yes, it can be news. It can be talking heads. It's exactly what we just talked about at the very beginning of this. Hold on one second, and let me find where it is. I've lost it. Market Makers business model. Okay, it's just like we just talked about here. We got to understand who runs it, how they're running it, okay? All the people that are connected to it, etc. The news will do this thing. They extract money. They use the news. Take a look. In fact, let's take a look at what happened to the euro today. Okay, this is a perfect example. Thank you for that, by the way. I can't really answer that phone right now. And this video is going rather long. So let me try and finish this up. We'll take a look at the euro dollar. And we'll look at what happened today. So we talked about this right here, that this was a stop run, right? And it triggered the pendings for the breakout traders. They rocked it down. Then they went and did this garbage all day long. And then you see right here, there would be stops located here because of that peak and possibly even that one. So the stops would be right here and also here. You might have about 2 layers. Now the news came out today, the news, the Fed speaker, and it tried to reverse every single thing that happened yesterday, okay? And boom, up we went. See? You know there's stops right there and above. And what happened? The market makers had to absorb that other side. They absolutely had to. And they drove us right back to the day's lows. You see it? It's incredible. It's like laughable. And then they end the day in consolidation, sideways. So yeah, they'll use talking heads. They'll use economic news releases and various numbers, and they know what those numbers are going to be. Does anybody else have any other questions at all? Guys, I'm going a little bit far right now, and I really should end this video. It's about 1 hour and 10 minutes long. Does it make sense? Do you guys understand it? Are we good? Do we all understand it? So in essence, we always want to be thinking, what are the market makers doing? Yes, Andrew, absolutely so. You always want to be thinking, what are the market makers doing? That gives us a tremendous advantage. Yes, you're absolutely right. Yes. Yes, it's not hard to understand their model. It's repeatable. It involves manipulation. It involves news. They have a great desire to make money, a very great need to make money. They need 20 million a day just to survive. But listen, that's not their game plan. They don't just sit there and make 20 million a day. Okay, they make a lot more than that. They'll make 40, 60, 100 million. They'll make a lot of money. All right, this is for their banking houses that rule them. They are the owners. They supply the money supply. Like, was it Baron Rothschild that said it? Or was it somebody else? He said, "Give me control of a nation's money supply, and I care not who makes the laws." Think about that. Give me control of a nation's money, and I don't care who makes the laws. Why should he? So, the Kuhn Loebs, the Rothschilds, the Bilderbergers, etc., you can just go on the internet and type in their names and see they own everything. I have absolute confirmation from this, 100%. I blabbed my mouth like a drunken Brazilian sailor, to the lawyer for the Rothschilds, who was in the back of a van one day, and he just sat back there and let me spill my guts. And after 15 minutes, he was looking at me really funny. And I said, "What? What's the matter with you? You think I'm nuts?" He goes, "No." He said, "You are absolutely correct. 100%. He says, "I was the lawyer for the Rothschilds for 20 years. Everything you've said is the absolute truth." He said, "They own everything. You don't even know how much they own." He says, "They own like 70% of America." I was like, "Oh my gosh." Like, I was in shock. I didn't even know what to say. But yeah, I got proof. I met the guy. So yeah, the banking houses control it all, and they are funneling money everywhere. It's not just currencies and stocks and bonds and derivatives and T-notes. It's everything, and they are making fortunes. And they invest that money into all kinds of buildings and businesses, and you name it. I mean, they are really, really powerful. You have no idea, guys. No clue. It is such a powerful thing. Okay, so all we have to do is just be sure that we are on the right side. Okay, follow the footprints. Follow the footprints of the money. So each day that we wake up, we are like Hansel and Gretel. We're lost in the forest. We've been asleep for 7 or 8 hours. We don't know what's happening. Maybe we slept for 9 hours. Then we're really lost in the forest. So we go to our charts. We get over here to our charts and we pick them up. And we go through every single thing and try and figure out where the market is heading based upon these daily and 4-hour. And then you drop into all these lower time frames here, but especially the 5 and the 15 and the 1 hour. And these will give you a clue as to what the market makers are doing and what their plan is. Okay? And we just have to be, in essence, trend followers, attaching ourselves to their plan and following the trend. We want to get short when they're getting short. We want to get out when they're getting out. And we want to get long when they're getting long. Okay? And if we trade small, we can breathe, even if we're wrong. It's the people that throw their whole accounts at it and say, "I want a 20 pip stop and a 100 pip target, and this is my plan," and they just get their heads handed to them because they're throwing everything that they got at the market, and the market makers will just eat them alive. Okay, I don't want to do that. I can be small, and trade free, and make 28.4% in 8 days. I mean, it's laughable. I just made 28.4% in 8 days. Okay? 2,840 pips of value in 8 days. Just by trading small and relaxing and not being nervous. Okay? So you do the same. All right, everybody. Really quick. Any more questions at all? Any more? Anything else? Okay, this is recorded, so hey, I'll process it now. I'll upload it to the website in a couple of hours, and all you have to do is just watch it again. And if you think of a question at a later date, tomorrow, the next day, next week, next month, ask me. Okay, it's no big deal. Just ask, and I'll cover it later. Okay, we'll definitely get back to that. All right, everybody have an awesome day. I'm going to push this